Right now, folks, we're going to jump over to our man Tim Ord. We talk to Tim every Tuesday and Thursday at 3:30. You can reach Tim at his website, folks, ord-oracle.com. There he is right there. Check out his website. And don't forget, under the Services tab, Tim's done 2 great webinars at TFNN. You can check those out. They're $149 each. You sign up for them. You gain access. They're on your members page. Watch them as many times as you like. The Secret Science of Market Tops, how to identify market tops, and the 6 secret ratios every trader should know. Tim Ord, good afternoon.
Good afternoon. Actually, the markets actually look really good here, even though we're kind of just inching up. It kind of feels a little bit scary. But the first chart I got here is the ARMS index. And the bottom window is the 3-day average of the trend or ARMS index. Next window up is the 2-day average. Next window up is the 5-day average. And the top window is the 10-day average. 10 days coming in 1.18. So that's 10 days. That's actually 2 weeks of trading where the trend is closing near 1.2. I mean, the average is 1.18. But that's usually a bullish sign. As you get more days of, in other words, the 10-day the 10-day average, which is 2 weeks, is more important than the 5-day average because it takes in more days. But here are the current, this is yesterday's close, and actually today they're going to be a little bit higher because the last time I looked at the trend is still up around 1.3 today. But, the 2 days, 1.21, that is bullish. The 3 days, 1.21. That's bullish. 2 days, 1.18. That'll be higher today. The 5 days, 1.16. Still, near 1.2, and the 10-day is bullish. I marked here in the tan areas, I guess you might say, or pink areas, the times when most of these, the 2, 3, 5, and 10-day trend are all in bullish territory. And you can see pretty good here, usually, they happen in uptrends. You got an uptrend there. Matter of fact, this has kind of been bullish for a while. And I just see no top here. You can see some mild consolidations, but this chart suggests there's no 10% correction coming right at us, at least right now. And so maybe you get a 2-3% correction, that'd be about it. But it looks bullish. Panic is good for the market. The more panic you have, the more bullish it is. This is the VIX. This is the monthly VIX here. Normally, if you get below 17, which is kind of the shaded area down in here, you really don't have trouble in the market. And it gets above 17, you can. But we've kind of been staying low here. The market's kind of going up. This is a monthly SPY. This is the divergence. In other words, markets making higher highs, and the ratio's making lower highs on the monthly time frame. And that's your divergence. We had last time we had one. We actually had one right here. This is not a perfect indicator, but we had one there, and the actually market kept moving up. But 9 out of 10 times when you get to the divergence, you're going to have at least some sort of a pullback. And on the monthly charts, you're looking for at least 10%. A lot of times a lot more, but at least 10%. Right now, the monthly charts are bullish. Ratio's making higher highs as the S&P's making higher highs. This chart probably goes back to, this square here goes back to probably, it looks like about July. So intermediate term, it looks really good. So let's flip over to the, there's a lot of different indicators out there. You got to at least have 2 indicators, in my opinion, probably more, to really get a good signal out of the market. And I do a lot of stuff with volume. Back in, this was, I didn't label this. This was February of last year. This February high tested the previous high of January, and the volume dropped 10%. This is actually a drop of 10% between these 2 dates. So the market went above the January high and closed below it, and volume dropped 10%. I did have that figure, but I didn't put it on here. Currently, we're testing the December high. This is December high right here. And that high came in 65 million shares. The previous high was October. It came in 1.78 billion. Well, if you do the percentage differences, it comes out 7.3%. So anything 7.3% is leaning bearish, but it's not a bearish signal. The market, on a test of a previous high, the volume should drop at least 10%. So if you test a previous high, that goes on a daily, weekly, monthly. This is on a monthly, so this is more important. But volume drops at least 10%. You have to hit the high. You got to break the previous high. You can't just get near it. You got to break it. But you got to break it, and then you got to close below it, and volume has to drop at least 10% compared to the previous high. If all that happens, then you get a sell signal. So right now we're testing the December high this month, and volume has to come in at least 1.65 billion shares to keep this rally going. If it drops 10% less than that and we close below the December high, we'll get a sell signal. I don't think that's going to happen because the VIX actually looks pretty good here. This is monthly VIX, still making lower lows, and that's usually a good sign. But I'm watching this in case we do pull back this month, which I don't think we will, because the trend readings are really bullish here. We got 2 weeks to go about for the month end, so I don't think we'll get a sell signal, but we could. But it looks pretty good. Volume needs to pick up here, so we're about 7 billion right now, so that needs to be over double before the month's out, and I think that probably could happen. So as far as the S&P is concerned, it looks pretty good. So
it is pretty remarkable how, we get a sell-off yesterday, and by the time you're done with your morning coffee today, we're back near all-time highs. And I agree with you. As in, this market just shakes it off. There's no reason for the VIX to be too elevated when we're sitting at a lot of strength in this market. I would agree. Please keep going.
Yeah. Okay. We're going to flip over. I want to flip over because we want to spend some time here. We're almost done with here. But this is the monthly XAU gold ratio. And it's 0.85 right now, and this chart goes back 1982. So it goes back a while. And so those are all the monthly XAU gold ratio for the monthly chart going back to 1982. And we got something, I think, historic or something very important about to happen here. And the music is just going to start popping on here. So we'll wait until the next round.
That was a good tease, man. We're going to be back in 3 minutes, folks, and we're going to talk some XAU. We're talking gold. Yeah, the miners. And, boy, you talk about some roller coasters in the past. But, man, this run, XAU at 394. We'll talk some miners. We'll talk some gold. We're coming back with Tim, folks. Stay tuned. We'll be right back. Welcome back, folks. We got the S&Ps up by 14 points at 69.80. We're talking with Tim Ord, folks. Remember, you can reach Tim at his website, ord-oracle.com, and those 2 webinars are great. 6 secret ratios under there in the services. We talk about some of them, but we're talking about a different one right now. We're talking about that XAU gold. So the miners, Tim, go for it.
Yeah, this is the miners. So here's the actually gold's been just rallying through the move since actually 2024, and the gold miner's been done. This is the XEU, and the top one was done really well. But what I'm thinking, I boxed out a couple of areas in the past where you had a 2-year trading range there. There's a 4-year trading range. This is probably should be more of an 8-year trading range. We had a 2-year trading range. We haven't gone. This ratio hadn't gone anywhere, relatively speaking, since 2014. It's basically gone sideways, more like 12 years. I kind of haven't updated this chart. I say 10 there, but it's basically going sideways for the last 12 years. So at some point, this thing's going to break out. Either it's going to break up or break down. It can only go sideways for so long. That's kind of a consolidation phrase, and this is going to break out. Well, I think the breakout, in my opinion, is starting right now. So I think it's been, gold stocks been outperforming gold for basically since mid 2000 or about the beginning of 2025, because that's been going up, and I think we're going to break above this 0.0175 area, and when this ratio goes up, that means gold stocks way outperform gold, and gold's kind of it's been running up. Gold stock did okay over the last 3 years, but I think the big gains are actually still in front of us. And that's kind of hard to believe because most of these gold stocks are up 100%. Well, the XAU probably this is about 2025 right there. It's about 150. We're up around 400 right now. It's done well.
Wow.
But if this ratio goes back, ratios trade just like regular stock patterns. They go in a trading range, they break out, they break up, they break down. They're not sporadic. In general, if you look for since about 1983 to 1908 or 2008, this XAU gold ratio bound around between call it 0.18 to high end 0.35. So that's about 100% in between this range here. And so it finally broke down and went into a cheap range of between 0.05 to, I don't know, 0.08, round off numbers. And we're against, if you can kind of see it here, we're basically testing the previous highs here. And I think we're going to break out. If we're not going to break out this time, we're going to break out next time. At some point, we're going to break out to the upside because trading range, 12 years in a trading range, is due for a breakout either up or down. So what that says, if gold does move, it's called gold right now is round off numbers, call it 4,500. We're at 4,600. Gold's 4,600 right now. If gold doesn't move and this ratio goes to 0.18, just kind of round off numbers, that means gold stocks double. If you kind of figure that out, in other words, XAU would go to 800 without gold going at 4,600. So it's a little bit confusing, but I think that's what's going to happen. I think gold itself is probably going to take a little rest, and the gold stocks are going to keep going. And I think all these little stocks are going to go. I think this is going to be better than the 2008 or 2000 to 2012 rally. Obviously, so I think there's just a big switch to the metals, all types of metals, because I think we're going to, even the United States is opening up to start drilling for copper. I think, I forgot where it was, I heard it on the news, but that's not the only thing. So I think this rally is still in the early stages of a bull run.
Yeah.
So
maybe Arizona. I was talking about Amazon's got copper going. I was talking about just anecdotally, Tim. Though I was talking about this morning, Amazon. It's like the first. They're with Rio Tinto. They're pushing out copper. 14,000 metric tons they might pull out over 4 years, and that's not enough copper for one of their data centers.
Yep. Yeah, that's all. That's where it's all going to go, and we're going to benefit from this. I showed other charts that actually the XAU to the Nasdaq stocks were breaking out to the upside. I think it's a 12-year cycle. So the only place it's going to be, I think, will be these mineral stocks. That's gold, silver, copper, all that stuff. So this is a place to be, and I think we're still in the early stages. So let's look at a shorter term view, kind of where we are. This is momentum indicator. Okay, the bottom window is momentum indicator. It's a 50-day average, so that's like 2.5 months. So it's kind of a slow-moving average, but it really measures the up-down volume. What's happening when it's in the blue area, in other words, when it's above zeros in the blue area. And we've been above the blue area since the beginning of 2025, so it's been about a year. And even though we did pull back here a couple of months ago, this indicator remained above zero. And we're still above zero. When you get below zero, it's a sell signal. And all the white areas across here are sell signals on this indicator, and it does pretty well. It doesn't get the exact top, but it comes close. And right now we're just holding steady. We're at plus 14. It has to get below zero. This is a bigger time frame. It's a 50-day average, so it's showing strength. I'm staying long. I don't see any reason to sell in my GDX position, and I'm actually still buying some gold stocks that are still turning up on the monthly charts. And then actually maybe we can, depends on what your listeners want to see, we can cover some of those. And
Please,
so have your listeners call you and tell them what you want to hear from us.
Listen, they can shoot me the emails, folks. Tommy@tfnn.com. All right, because I love it. We talk to Tim on Tuesdays and Thursdays. You can always fire stuff into the Tiger's Den as well. And we're over there, so let me know if you want to take a look at some of those. But yeah,
whatever, interest, because we're in here trying to give you the best information. In turn, we hope you, anyhow. So, this is the 50-day average, up-down volume. Up-down volume seems to work better than the advanced decline, which is this indicator up here. Both of them are good. I watch them both. Both of them right now are still on buy signals. So there's no sell signal here. How high in the market go? I really don't know. But these indicators are pretty good at picking out the highs. And here's a shorter term indicator. This is a cumulative. I keep showing this chart quite a bit. It's kind of a shorter term chart. It's a cumulative up-down volume. And this indicator is basically making higher highs as the S&Ps are making higher highs. So, and as long as this indicator is in an uptrend, or GDX in an uptrend, when the cumulative up-down volume and cumulative advanced decline remain above the mid-Bollinger Band, which is this band right here. And so we're way above it there. There's a mid-Bollinger Band right here. Here's a mid-Bollinger Band. We're far away from it. We're up hugging the upper Bollinger Band. So it's not even close to a sell signal. So this aren't even on a short-term basis here. So that's the reason why I got out of my position, because I was looking at some other indicators. I got back in because of this indicator, somewhere in the 75 range. Even though we did retrace here, I'm still long. So I don't see a sell signal here in GDX, so we're holding long.
Tim, great stuff as always, man. We appreciate you coming on the program a couple times a week. Folks, check it out, orid-oracle.com, and check out those webinars under the services tab as well. Tim, have a great one, man. We'll talk to you on Tuesday. Thanks so much.
All right, thank you.
Thank you. Bye. We'll come right back, folks.